Well, I'm seeing the same pattern in the market in a similar position in dollar yen on this 2-week chart, and we're anticipating a downturn. So Elliott, even on this degree of trend, is quite powerful. And I also know what to anticipate. If this count is right, wave E is next. It should unfold in 3 waves. It should end above the end of wave C at 101.26. But I also know that alternate waves in triangle patterns often travel or are often related by the golden ratio. That's the 61.8% ratio. So if the top is in place at the existing high, which happens to be 115.51, wave E should likely retreat towards 104.76. So let's just call sub 105. So when the market was trading just above 115, we're talking about a substantial decline. This is a 2-week chart, so we're talking about decline that's probably going to last months with very limited risk. Even if you were to risk to 118.65, and this is part of the strategy part, beyond the analytical part, we'd be risking, say, 3 figures in order to make 10 figures. So it's better than 3 to 1. So there might have been an opportunity, and that's how back in the 90s. That's how I approached it. I just said, if I had seen this chart, I'd say I have to risk back to the end of wave B. But there's an alternative here. Could have also said I'm going to wait for evidence of a downturn before acting, and that way I'll be able to limit my risk to the most recent reversal point. So let's build the case that a reversal was due at this point. Again, I already mentioned that wave D should end beneath, or at least no higher than the end of wave B at 118.66. Market was approaching it, trading above 115, the actual high being 115.51. So we were on the lookout for a turn to occur. So when I went down to the daily chart, I noticed that this final leg of D, wave Y, because remember I'm counting a combination, notice the consolidation in the middle of the chart, labeled similarly A through E. Well, it's a triangle pattern, which means, and it tells me that the subsequent move should be the final move in the larger pattern, because we call the move out of a triangle a terminal thrust from a triangle. So terminal gives it away. And in this case, we're anticipating a rally from the triangle. It should unfold in 5 waves. We already knew where it should not exceed 118.66. So we tried to count 5 waves ending beneath that proposed ceiling. And in this case, we thought from 109.11 that we could do so. You might be able to see it for yourself on the chart. 1, 2, 3, sizable setback, 4, and 5. So when the market reached the new high above this peak, we started saying, hey, the market's probably very close to its peak, given the structure of the rally from 109.11 and also the proximity to the proposed ceiling at 118.66. So it was time to anticipate a downturn. But was there perhaps more evidence that a downturn was anticipated? In this case, and this falls outside the wave principle, in a way, I took a look at RSI. I took a look at a momentum. Typically, 5th waves are weaker than 3rd waves. So long ago, I determined that taking a look at RSI during 5th waves was a good idea. Was the 5th wave weaker than the 3rd wave? And you can see in this chart that it is. If we're counting from 109.11, 1, 2, 3, 4, 5, notice momentum peaked towards the end of wave 3, pulled back in conjunction with wave 4, but then failed to move to a new high. It did travel in the direction of price. That's not unexpected, but it failed to reach a new high during wave 5. And so we saw that wave 5 was weaker than wave 3, and that's common. So we had evidence, the divergence between price and momentum, that the rally was mature, and that's a description of a 5th wave. So there too, looking for a downturn. But before we get into the downturn, notice on this 4-hour chart, the structure of wave 5. Remember, I was talking about waves within waves, same patterns, reoccurring patterns, but at different degrees of trend. Well, it looked to us that wave 5 unfolded as an ending diagonal. So just like the terminal thrust from a triangle warned us that wave C was underway, wave 5 of C unfolded as an ending diagonal. In its name, ending, which means it's the final wave. In this case, this is a 5th wave pattern. So we had further evidence in conjunction with the momentum divergence we also see during 5th waves or accompanying 5th waves. We saw a pattern of a 5th wave that suggested it's the final movement of a larger sequence. And as you can see from 115.51, we saw a rather sharp decline, impulsive even. And you know, when I say impulsive, I mean in 5 waves. And 5-wave movements unfold in the direction of the trend at one larger degree. So now there was evidence that a downturn had occurred. So there's plenty of evidence that the rally was ending, and then evidence started to build that it was at an end. Now we needed, to the best of our ability, to try to confirm that the rally was over and the trend had turned down. And in that case, the best evidence, if we're going to wait for the market itself to provide it, is to wait for a 5-wave decline at any degree of trend, followed by a corrective recovery on the same degree of trend. So here on this 4-hour chart, you can see a rather sharp decline. I've already labeled it as impulsive as wave 1. But if we look down to a 1-hour chart, from the high at 115.51 on the left side, you can see how I counted it in 5 waves. Wave 3 even subdivided into 5 waves of its own. And while I don't show it on this chart, wave 5 was weaker than wave 3. If I put the RSI indicator on this chart, it would show you that while price reached a new low, RSI did not. So just like in the thrust from the triangle to the upside I showed previously, at lower degree, we see the same divergence occurring. It was a sign that 5 waves to the downside from 115.51 was coming to an end. That's the first half of the reversal sequence I want to see. The second half would be the corrective recovery. And that's what we're following right now, a corrective recovery. Notice I'm back to counting with letters. A double bottom at B, so that reminds me, you know, I start thinking of patterns that this could be maybe a flat. So if I can count 5 waves up in wave C, without the market exceeding 115.51, we'll have completed that reversal sequence I'm looking for, the impulsive decline followed by a corrective recovery sequence. So we think we're well within that sequence, though it's not yet complete.